technological issues. All right, YouTube people, here we go. Wait, there we go. I am live. I just had several technological issues. Whenever I say the word is it Hey, Dan, is no, it's technical issues. I always say technological issues, and that doesn't make sense, right? Is no, it's not a word because I can't even say it. Technical issues. I always seem to call it technological, but it's technical. Guys, I'm triggered today. I'm triggered because I can't win, right? The majority of people love my videos because I do an awesome job helping you guys with my annoying arrogance, I must say. From the feedback, 90-something% of you love what I do because, as you guys can see, I'm always trying to give you guys as much content as possible. Then you have the select handful of people that really have no life, right? You have the trolls, right? You're not supposed to feed the trolls. Dan's a nice guy. So if you're a troll and you're listening and you leave a comment and then you get a nice reply back, that would be Dan, right? If you get a wise ass response back, that's me not letting Dan comment back. So then that would be me. So if you're a troll and you like to troll, now what I'm going to do is I got ways because I have this triggering personality that likes to trigger trolls, the handful. So now I think I'm indirectly going to do it because then you draw them out and then bam, you block them and they're gone, right? So now if you're a YouTube troll listening, super simple. I'm actually not even going to respond back. We'll just delete and block you. Makes it so much easier now. So I think that's what I like about the YouTube. Trigger them, right? So I think I'll take a couple minutes, trigger you out, and then you can't help yourself but to say something stupid. Then boom, got you, delete, block, gonzo. That's how we do it. So I say that, right? Because you're like, why is he talking about trolls? Because yesterday I do a watch list video for you guys. It's a very long watch list video. Do you think it's easier for me to talk for an hour and a half, or talk for 10 or 15 minutes, right? Is it less energy or more to talk for more time, right? So if I talk to you longer on these videos, is that more of my energy, right? Of course, right? I got to talk longer, talk to you guys, X, Y, Z. It's easy. Guys, I can make a video. I could have made the watch list right now, cut a 10-minute video for you guys. Now, some of you guys will probably listen and be like, oh, I wish you would do that. It'd be much quicker. That's not me. If you don't like, it's like this. If you don't like longer videos, don't watch me. Because I give you longer videos. Why do I give you longer videos? Because I'm not going to give you bullshit. I'm going to tell you stuff. I'm going to go in depth. I'm going to go through the psychology. I'm going to show you the good, the bad, the yada, the whatever, right? If you don't like it, right? So there's two aspects. If you're a troll, you're not going to like me. I'll delete and block you. Simple, not going to entertain you. Jadunzo. If you're somebody that has a short attention span and doesn't like longer videos, don't watch me. For those of you guys that want to learn the stock market and learn the goods and the bads and the ups and the downs and all that, then you watch me. So if you don't like long videos, I'm not going to make them shorter. So some of you won't like that response. Other of you guys will actually like that and say, wow, I like that. At the end of the day, I can't make everybody happy. There will be tons of videos. I make over 1,000 videos. There's probably over 1,000 videos I made on YouTube. Many of them are shorter. Many of them are longer. If you don't like them long, don't watch me. Jeez. And then you got to be one of these idiots, right? Hide behind a little YouTube thumbnail, has no followers. All you got to do is troll all day long. Just stupid people. Get a life, right? So as I let that out, delete and block, because you have some idiot that probably won't like when I say this, bitching and moaning because I talked for several minutes yesterday trying to save you guys in your broker. Do I manage your 401k? Let me ask you a question. Do I manage your 401ks? You're listening right here. If you can't see me on YouTube, you can't see it, but in social media, am I your financial advisor? The answer is no. My video yesterday and several videos, I go on and on trying to teach you guys about helping you to manage your 401k and protect yourself. Do you think I get a dime out of that? No. I don't get shit for managing your 401k because I don't manage your 401k. So I sit there and go on trying to give you guys nuggets on how to do it for yourself so you don't get screwed by the system in the game, right? And then you have some guy bitching and moaning behind a little YouTube thumbnail that I talked and ranted for 7 minutes. Now specifically because they said for 7 minutes, now I'm going to go for 8 minutes on this rant just to give an extra minute longer. And I'm going to rant and not even talk about the watch list for 8 minutes, right? I'm going to go 8 minutes instead of 7 just to piss other people off, draw them out, block them because they're idiots. Why? Because, guys, we're sitting here busting our freaking asses every day trying to help you guys. And again, most of you guys love it. That's why I do these videos. That's why I don't do them for 10 minutes. I'm not going to do... It's very simple, guys. Make a 10-minute watch this video. And, hey, there we go. In and out, done. And what do you really learn, right? Stupid people. People are stupid. All right. So, guys, if you notice lately, I've been going on a QE rant, right? Quantitative easing. Why have I been posting a lot about quantitative easing? Because QE or quantitative easing is an incredibly important topic for you guys to research, right? Learn about it, research it, because it's the game, right? So again, if you guys are pissed off or trying to short or why the hell is the market going up and blah, 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 and you don't understand or know what quantitative easing or QE is, you need to research it and go through the process and learn it because it could be a very pivotal thing moving forward, not only up until the election, afterwards, potentially, we'll see, and even previously over the past 8 years. It's very important. It creates this movement both up and down in the stock market. So I actually changed my mind. I'm not going to keep ranting right now. I think I got it out. I don't think I have any more to rant about. So yeah, that's that. Quantitative easing, very important to learn because a lot of people are still questioning. You still see it, guys. We see it every day. We see the process every day of people saying, how is this market going up? The stock market's shut, the country shut down and blah, 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 blah. Well, the simple fact of the matter is quantitative easing is basically just buying the shit up, right? So if you're trying to short the market down, and if Trump's in control of the Fed right now and the Treasury, and they already have said, I showed you guys the articles yesterday, they're going to keep buying it up. If you're trying to short a market when they're telling you they're not hiding it, they're saying they're going to buy it up. So if you're trying to short something while they're telling you you're going to buy it up, you're just shooting yourself in the foot, right? And you can see this great channel. We'll see, right? We'll see how long, what they do, how the process goes. Be aware of fake outs. But just look at this channel, guys. You can see the SPY, just kind of tracking the overall market. You can see kind of this channel. You can see it kind of failed up in here. Now you can start to kind of move it out in here. You can say, oh, okay, maybe it's going to start failing the channel. Maybe starting to fail out here. Maybe you'll kind of then reset it out here, put it out over in here. Got to watch and see. It may come back down again, right? Look at these moving average lines. So it may start to extend out here. We'll have to watch and see. But if it starts to fail, if it comes down here and fails at 20 EMA, then that's a potential problem. But these kind of pullback days, it might come back down here and then they kind of just, we'll see. The moment price fails and starts to fail out of this channel, that's a potential problem, right? So you can look at this and there's a lot of this. It's just kind of interesting, right? Goes up and coming back down. Is this normal? Is there a lot of quantitative easing? I don't know. There's a lot of volume in here, but be aware. Just again, understand if they're doing quantitative easing. Don't be surprised if it keeps going up. If it fails, it doesn't mean they won't use quantitative easing again. Maybe it'll fall back down, they'll double bottom, and then buy it back up again. Learn the patterns, you learn the game. Very, very important. Elio, you says, very interested in learning more about QE stuff. I started reading about it on Investopedia. Yeah, so guys, whatever. You know what? So you're listening, and I'm going to go on a rant. So a rant about quantitative easing. Very important. I'm not even going to start the watch list yet. Because you got to understand something. So let me go on my QE rant. I don't know a lot about quantitative easing. I don't know much at all about it, to be honest with you, other than it's the Fed buying shit back up, right? So when it's dropping, they're buying it up. What they buying, how they're buying, I don't know what they're doing. They're doing something. They're buying it back up. You can say, well, that's terrible for the system. And honestly, guys, I I actually at heart, I am anti QE. I think QE is absolutely terrible. It's terrible for the system. But, right, I had a little bit of a change of heart recently. Why am I having a change of heart? Because you have to think also logically. The system's been effed and screwed for a very, very, very long time. We're teaching you guys the system, which is learning candlesticks and patterns and all this, so you can learn the system, so you can learn how to trade and not only say defeat the system, but you can play the game, right? Once you learn the game, you can play the game. This game also applies to your 401k. Once you can learn this the game for trading, you can apply it to your financial system or to your 401k, and then you learn the games which I've been telling you about, the financial system and your brokers and the financial advisors. I've been teaching you guys this game, right? So, quantitative easing. When the financial crisis happened in 2008, now you have to ask yourself the question and say, quantitative easing, terrible, fake money, fake injection, buying the stock market back up. That's absolutely terrible, right? Yes. Here's where the confliction happens. If you have a 401k and they didn't use quantitative easing, is your 401k going to go back up? After 2008, you guys see this incredible run. Would that run have been able to happen without quantitative easing? If the answer is no, now you have a problem, right? Because you have a lot of people saying quantitative easing's terrible, which it is. They created a system that's terrible, but when was this system created? When was the Federal Reserve System created? How long ago? How long has it been crappy like this? So are they creating a problem, then when it fails, come up with another solution that's worse than the original problem? I don't know, right? So quantitative easing has been jacking up the market now since 2008. Without it, would you have a 401k that's gone up? Would the market have, instead of going up, without quantitative easing, would it have gone down? Great question, right? So now flash forward to coronavirus, right? Quantitative easing didn't happen under Donald Trump. Donald Trump did not come up with the terminology or the process of quantitative easing. There was 3 rounds of it under the previous president. The previous president had 3 rounds of quantitative easing and 1 interest rate in 2008 years. President Obama had 1 interest rate hike in 8 years. Check what happened after he raised the rates that one time. He sneezed, the market fell. No more interest rates hikes after that. Coincidence? I don't know. 1 interest rate hike in 8 years, sneeze, boom, market drops. 3 rounds of quantitative easing under President Obama. Flash forward to Trump. He didn't come up with quantitative easing. Now he's using it. Now you can say it's absolutely terrible. Okay, yeah, I'm not in disagreement. I think it's terrible. But like I've been trying to tell you guys, I want quantitative easing because I want you guys to get your money back in the stock market or into your 401k so you can protect yourself. I said it over yesterday. Fine, I'm repeating myself and I'm going longer today. Just trying to tell you this stuff because when you understand it, and then you can separate the emotions of it and understand. Once you understand the game, you can learn how to play it. Then it all starts to make sense. That's why I don't give you guys, I just wasted 14 more minutes. I got to, out of my breath, that has nothing to do with the watch list for tomorrow. Most of you will appreciate what I'm trying to tell you. And then there's the idiots that have no life that don't like this. Why don't they like it? Number 1, either they're lonely or bored and they have nothing left to do in their life. Or 2, they don't like me telling you the game. Truth hurts, right? There's a lot of people that don't want you to succeed. There's a lot of people that don't want you to know the game and understand this stuff because they don't like that. They don't like a fair game. So I'm giving it to you fair. I'm telling you like it is. And it's the truth. Research it, learn it, because then it all starts to make sense. All right. Maybe now I'll start the watch list. All right, so guys, yesterday, I was very braggadocious about our watch list. Our watch list was awesome yesterday. I got to keep it real. Our watch list today sucked. It was a terrible watch list, except for one. So I'm actually partially right. I keep telling you guys, did I not tell you guys every single day, at least one from our watch list goes great. And today, one actually did go really good. AM, right? So AM, you can see, had a nice kind of flag, cup and handle on the daily. And as you can see, I think we had it. Where did I have the alert on AM? At or above 450. That was basically right around here. So looking as it was breaking above close, at or above 450. And then what did it go up to today? So cup and handle, flag, look for the patterns. What did it go up to today? Had a nice run up to 485. Choppy pre-market. Again, you got to let these kind of build. And you see, again, a lot of this will get choppy. This is where, guys, perfect example. That's why I say use trade ideas and also use our watch list. Keep it off to the side. Let the patterns play out. Sometimes you'll get usually probably one good one in the morning and then one or two in the afternoon after the patterns play out. And you can see right here is like super choppy, super choppy. And then if you're, let's just say again, let's say you don't get in before it breaks and goes red to green. You had a red to green move, flag back here. Nice 5-minute red to green move. You can see a 5-minute candle, 453 down to 445. That's an 8-cent candle, not too bad on a 5-minute. If you got in anticipation of a break of, again, pre-market highs were a little bit choppy, right? But, here's a 5-minute kind of flag right here. And you could have gotten in at the break after it held previous close, gotten in a break of this 5-minute candle, 453. And then you could wait, again, the ride the 9, right? You could wait till there's a close below the 9. If you waited to here, you still, hey, that's still 453 to 469. That's still, what is that, a 16-cent move? Not bad. But remember, there's warning signs right here. When you see a high wave candle that rejects underneath a whole dollar amount, get the hell out, right? So right here, 453, you could have rode that up and bam, right up here, 453 to 485. That's a 33-cent 5-minute move. You could have rode the 5 up or at the 9. That's a great move. You will take that all day. And look at how long you could be in the trade. That's on a 5-minute. You could switch it up to a 1-minute and kind of go from there and just kind of start seeing as you zoom in on a 1. Right here. Goes red to green as it starts to bounce off that 200 right in here. As it kind of goes and breaks out of that falling wedge somewhere right in here. Obviously that nice doji right there, that would have been beautiful. 451. And then, maybe you took profit right in here. That's a 7-cent move. Or if you get an earlier entry, I know we say ride the 9, guys. If you get an earlier entry, you could always move it out to the 20 if you want to stay in it. So 451, look at how long you could have rode it out to. Right over in here. Still 30-something cent move. Look at that. You tell me, guys, are you getting a trade ideas move riding the 9 like this? You get less than a handful of these a month if you're lucky. Look at that. Beautiful bull flags, right? Right here, 1, 2, kind of a third one right in here. You had 2 to 3 really nice bull flags. Look at those small little candles riding up those moving average lines. That's a beautiful play. We have, at least one good play usually a day on this. It might happen in the morning or it might take to the afternoon when the volume comes in. So that was AM today. Really nice move. And I had a 5-minute setup. Great play. All right. So that was AM. Actually, good news. I'm not making a swing trade watch list for tomorrow. So this video, it'll be less. I'd like to say less talking, but who the heck knows? Usually when I have more time, I talk more. So, all right. You know what I'm doing too? I'm actually going to do this for you guys. It was helping me because my brain, I'm trying to focus better. I'm singular kind of focused. I'm actually doing this for our day trade watch list. I'm actually putting on, dang it, I didn't clear the cache of the cookies. I'm actually going to put the previous day's watch lists up here. So you'll see right underneath here, I'm going to put the other days during the week over here. So in that way, like I was telling you guys, remember I was saying you'll get one or two that'll go really well, and then it'll, there'll be pullback days many a times. Well, that's where you'll want to go and look down here when you'll see when I clear the cache, previous day's watch list, because something from 2 or 3 days ago may have pulled back and may launch tomorrow. So that's why you just don't only look at the previous day's watch list, because we put stocks that are looking to break out, but many times they don't break out the next day. It has 1 or 2 pullback days. Then it launches when nobody's looking, right? That's where you can miss some really great moves. So pay attention. I'll be posting those down here. I'm going to have Angel take a look at that as well. Just so we'll kind of basically, so coming into next week, maybe I'll put like these, we'll just copy and paste them down here and just kind of go through them. So, here's, let's see if there's an example. Let's look at, I'm logged into, we'll just do a little test for you guys and see. So 4/29, what day is it today? The 30th. So on 4/29's watches, I had these ones here. So we'll take a look at, before we build a new one, let's just take a look, take a gander and see. CPE. All right. Is CPE still in play? No, because it hasn't pulled back, so this is what we want, right? To catch the breakout. And that's, look at that, guys. Look at that. Look at that. CPE. Look at that. Money, 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 money. Remember Ted DiBiase from the WWE? Had that on here. Look at that. Boom, guys. I said resistance at 70. What did it do? It still went up. It went up to $1. You penny pump, you penny sub $1 penny fans. Look at that. It had it right here. Called that. Bam. What day's today? That was going into 4/29. Yeah, I had it right over in here. Right here. Boom. Now I'm the heck out of that. But there's some people that are crazy. They like to stay in that stuff. Look at that. Called it right here. Bam. 40-cent move on a sub $1 2-day move. Boom. So look at that. That's braggadocious. So I'm going to brag about that one. Sub $1 stock. Bam. Catch these before they break out. That was a nice move, Lucian. Good job. Thank you, Lucian. You're welcome, Lucian. All right. So that was CPE. Arco. Let's see here. That had the inverse head and shoulders, right? We had it right in here. Boom. What did it do? It popped off. It went. Great move. Could still be in play. I don't typically like to stay in on these, but guys, maybe look come tomorrow or Monday, maybe it'll still hold. You'll get a crossover and maybe it'll continue up. Watch and see. I personally like it down here. I don't like them when it's out here, but it's still technically in play. Keep an eye on it. That's why I take a look at some of these next week. CNXM. All right, so that was one. Here was one right here. Perfect example. Had the reversal, right? Little kind of fake out candle, came back down. Now, me personally, that's where, again, for the ones on our watches, I'm day trading these. Some people like to swing trade them, right? If you were swing trading it, you could still be in. I personally don't like this candle. You can see, again, if you're not scalping or you're trying to swing trade them, I put day trade watch list. You can swing trade them. Technically, this is still around, but I don't like, this scares me right here. It could, it still could fall, down to 708, but like, if you get a false breakout and it starts to fail, that one would make me nervous. So I'm not a fan of that one right now. CPG. CPG has that kind of, so right here, guys, right? What was that? 429? Boom. Right here, guys. No coincidence. Look at this. CPG. Broke out. One day. Now that makes me more nervous. I'm not a huge fan of it. But remember, guys, if you got in, you might still stay in because it is. Remember, these are small cap penny stocks. They pump and they dump, but they also pump. It is holding the 50. I'm not a fan of a star pattern. It still has a gap it could go up into. So this is where I'm saying don't sleep on these guys. If you took your profits, watch. Maybe next week it has a couple pullback days, forms a flag, and the 9 EMA catches up, and now you have a cup and handle and it flies again. Right? So that's why if you're day trading them, these ones on our watch list give you a chance many of times to swing trade them. Why? Because the whole world is not watching them. There's a lot of people. We're a good sized company, but what is the whole world watching? Remember, the day traders, they're firing up trade ideas in the morning. They have the morning gappers. You have tons of, tens of millions of shares being traded, and everybody in the world is duking it out. People on trade ideas, they're following the ones that are moving 50, 100, 200, 300% a day. Those are great to trade, right? But our watch lists, you'll see many of them on our watch list, those ones that are moved at 4, they move 4 or 5 or 6 or 7%, moves in a day. Not as much as the trade ideas. That's where you can be sneaky. And now you're up against 1 to 2 or 3 million, shares traded each day rather than 50 or whatever, 20, 40, 50 million, less of the herd. Now you might be able to be in the trade potentially longer. So if you're trying to still scalp 10 or 20 cents, you can go fight against the herd if you want. Again, it's a great strategy. I personally don't like to fight the herd. I like to stay away from the herd, right? Also, I do a lot of stuff for our business and all that stuff, so I'm a lot more distracted. I'm running Bullish Bears and doing that stuff. So if I'm trying to do something on a blog or look at a trade, I don't want to be split seconds. I want to have several potential minutes or maybe even longer. That's why I like our watch list, because I can kind of I don't have to panic. And you'll see on our watch list many times if the trade goes against you or it dumps, the candlestick that drops on you might only be 5 or 10 cents. You can get a nasty dump, but the losses will be less. The gains will be less because they're typically higher float stocks. So less pumping, less dumping. They're a way to almost kind of day trade intraday, longer term, longer day trade, or potentially a short term swing trade, Why is my computer making a noise? Oh boy, why is it humming? Do you guys hear a hum in my computer? What the hell? Of course. All right. Do you guys hear a hum on my computer? It's humming. Might have to it's faint, getting more faint. All right, so that was, we'll look at one more, Cal, and we'll build a watch list, CAO. That's my whole point, guys. Remember I told you I have a short-term attention span, something like that. I'd be in a trade, I'd be in a low float trade, and then I'd be more concerned about my computer humming than I would my trade. That's my brain. All right, so here's a perfect example of one to keep an eye on, right? Cal was on our watch list the other day. Back here, right in here. So look at, guys, Cal was on the watch list going into yesterday's. So I'm assuming it was probably right in one of these two candles. Probably right in here we called it out. Look at that beautiful move, right? Is it over? Not necessarily yet, right? Because now you could readdress this. Watch a couple days. Maybe it'll bounce and maybe it'll form a flag and the 9 EMA will catch up and maybe that'll run. But you guys can see, we had that one on our watch list. Look at that beautiful move. Gorgeous move. Beautiful move up. Watch for a pullback. All right? You don't hear the humming. It stopped. Magically, the humming stopped. Why did the humming start? Just to mess with me. Maybe my computer was trolling me. Who knows? So you'll see, guys. So here's a perfect example, right? Again, great ways to trade. You have to know how to trade these. So if you're brand new, it's going to be a lot harder to trade a super quickly moving stock like this, right? The low floaters, they pump and dump very quickly. Great strategy, great way to trade once you know how to trade. And you'll see on the watch list, that's why you'll see lately, I'm taking you away from the herd, right? How do I do that? Hold on, I gotta itch my back. I'm getting you guys some lower ones where going on the ones, here's what we're going away from. We're going away from the herd, right? The herd is paying attention to the ones that are running 30, 40, 50, 60% on the day for continuation days, right? I'm taking you to the other side of things. Again, not a right or a wrong way. I'm trying to catch you in some of these before the herd catches them, right? So gives you a potential chance to get in sooner before other people do. So that's where I'm trying to catch you guys. You know, a perfect example is I'm not going to put this on right now, but I'm trying to, so you guys see the patterns? I'm trying to catch you guys with a pattern before it breaks out, right? So ideally right in here before it went today, right? So you can see kind of a flag within an inverse head and shoulders before it pumps up like this. So, you know, if we got in over here, this is where some of you guys like I would day trade it, but some of you guys, if you got in an entry over here, you might ride it. If you look at fundamentals and you want to stay in longer or whatever, you might decide to stay in through these high wave candles. If you get a good entry, you have the chance to do that, right? You want to buy low. If you have a pattern breakout, you know, maybe this thing will do crazy high wave candles and go up here again, right? So that's where I'm trying to get you guys, is the entries before the breakout on the patterns. So that's where I kind of avoid things like the high wave candles and those ones for you guys. But as you guys will see on our watch list, one or two will break out and then again readdress them in a few days and look at them. We'll do one tomorrow. Now tomorrow's going into a Friday. It might be harder to get a great, you know, you might get one okay one. You might not get a great one going into a Friday because it's closing out the week. But if it's a crazy bullish days, then maybe it'll break out, right? So if the market's a down or a doji day tomorrow, it might be a dud. Then you'll take our watch list going into tomorrow and recheck it Monday and see what happens, right? So see that, guys? AM is now hitting the scan today. I had it on last night. It's hitting the scan now because it had a breakout day. So this is where now, if I didn't have AM on the watch list last night, I probably wouldn't put it on today because I was trying to get a smaller candle before, right? So this is where we had it on last night to get to this. If you had a decent entry over here, you may consider holding now. You know, if you got in at the break of this, you have a chance to potentially still stay in if you want to stay in a little bit longer, right? You have to look at the other patterns as well and see on the hourly. The hourly, it's still in it, right? You might have a pennant or a possible flag. It's bouncing off support. It's choppy up here, you know, but you could still contend potentially to be in that trade, potentially. So this is where I'm trying to, right here, guys. I'm not trying to put something on when it's at resistance for you guys. I'd like it when it's down further. Hitting resistance, that's why I don't want to put it on. High wave candle. All right. This is where I potentially start to address it. The reason why I might look at putting DSS on there is it's a sub $1 penny stock with a history of pumping and dumping. So now you have a possible pennant off the 9 and the 200. This one may be setting up for a pump. Remember, if this can go from 35 cents up to 45 cents again, that's a potential of 10 cents. You can say, oh, big deal. It is a big deal for a lot of traders out there because there are a lot of traders that might take this sub $1 penny. So think about this, right? Let's do the math, right? There are some people, actually, that's not it. Let me get the calculator. Oh, not some. There's a ton, right? Penny stock traders that have, if you bought 10,000 shares of a 35-cent stock, that's only $3,500 of capital you're using, right? If that thing moves 10 cents, let's say you scalped 10 cents, that's 10,000 shares times 10 cents. That's $1,000, right? Now, what if you only scalped 5 cents out of that 10? That's $500. So if this thing pops up, that's why I put these on. If this thing pops from 35 to 45 and you scalped 5 cents out of it, you bought 10,000 shares, not to swing trade it. Some people will swing trade it, but to day trade it, that could be 500 to $1,000, right? You're getting in, you're getting out. Boom, scalp it up. Obviously, you got to look at the intraday patterns. So that's why I'm putting those on there for those that like the sub $1 stocks. Let me look at the hourly. You know, I don't like how it's, remember, it's not like your typical stock. These right here, this thing can hit, this could easily dump down, or it could get a quick pump back up, and you'll see right here. That's why I'll put DSS on the watch list for a sub $1 stock, because it might have another, it had a pump back. See, you can see it's been traded a lot, right? Pumped up, come back down. It bounced down here, bounced up. It may want to bounce up again, right? It's obviously a heavily day traded stock. 45 to 50 cents. Price holding MAs on daily. Watch for possible pump with resistance between 45 to 50 cents ish. So obviously 50 cents on a stock like this will be very important resistance level, because those whole and half dollar amounts, right? Right up over in here, right? So if this thing pumps up, remember it's a heavily day traded stock, right? Heavily traded, right? So DSS. Now, typically, I like to see smaller candlesticks off the moving average lines. The reason why I have a bigger one, because it's a penny stock, sub $1 stock, has a chance to move potentially up to 10 cents or so. And it's definitely one to keep an eye on. MGY. Let's see. Nope. Nah. Now this is one of those intriguing ones, because you can see kind of a cup and handle-ish, another cup. It's near resistance. So it's hard to ignore the cup and handle, but now it's probably going to give back half of this candle. So this is where, like, let's say if we had, here's a perfect example. If I put this on the watch list tomorrow, right, for anticipation of a break of 383, there's a very good chance it doesn't break tomorrow and then pulls back and gives half that candlestick. Maybe he trades like this for a couple of days and you can say, oh, that was a dud. But then mid next week, this 9 EMA might catch up and you might have a bull flag here. Now you have a cup and handle, that thing launches. Nobody's paying attention to it. That thing might rip up, right? That might have who knows, maybe it rips up. That might be a day that it goes from 370 all the way up and maybe it fills the gap. And you're like, oh, what a great runner. The reason why you may miss it is because everybody's paying attention to the herd. That, a gain like that on the day might be a 12% move, but you might have you might have 20 small caps that day that were over 10 or 12% and it gets lost, right? That's why if you pay attention to our watch list and keep track of them, and I'm going to try to make it easier for you guys by putting previous days results, so then you can easily check in the pre-market and go see, oh, okay, let's see if any of those are worth taking a look at, still for potential continuations. So, Google or GOGL, am I going to put that one on the watch list? It's at highs, so I typically don't want to put them out on there when it's at highs, so I don't think so. This one's in the gap. I'm not going to put it on, but watch, ERF if it wants to fill the gap. Nope. Now also remember too, guys, when you have a down day like today, also more difficult to find decent bullish plays. That's why you'll see many times the plays are very choppy when the market's down. The potential following day, it might be more difficult to get good plays. I do like these. I don't like this pattern right now, but I'm a huge fan of these companies that have gotten murdered, like J. Jill. I think that's a women's clothing company, I think. I mean, look at this thing. It's a piece of garbage penny stock now. But, like, it was a big name. If it had a better, if it had a better reversal or a possible flat, like if it was this candle, if that was that red one, I may risk off it. I still may not be opposed to it right now because it's bouncing off that 20. It might get a freaking pop. Let's see in the 1 hour. It's such garbage on the 1 hour, but it's a penny stock right now. Might be flagging. If it gets a pump up, kind of a cup and handle-ish. This is why if this wasn't a company like a big name at one point, I'd probably ignore it. But it's hard to. I'm going to look at other ones just because of the fact that it's a sub $1 penny stock. This thing may trick people out and then pump up, get above that. Again, I'm not saying it's going to go be some huge company again, but this thing may pump up. Man, there's not many good plays. Not many good ones. All right. So here's a perfect example. So you'll see, I just went through the list of my scan that I want to do and maybe one okay play. Now, I would like to get ideally more on a watch list for you guys. So now that's when I'm going to switch over to my nightly scan with higher movers. And you'll see the other one was 2 to 6%. Now I'll go and see if there's any ones that might be able to go from this watch list. Nope. 26 million float. So these are one of the examples of so typically I don't like to put it on when it's holding highs like this. This is one of those ones that could go up a little bit more. You can see some resistance, but the thing it is a lower float stock. Let's look at the hourly. It's a bit over, definitely way overextended. I'm not going to put it on. This one's interesting. Okay. So Bohr, you can see possible. I don't love it, but it's like kind of possible pennant above the hourly, sub $1 stock. This one may get a pump. Maybe setting up for a pump. Might put Bohr on. Man, a lot of BORR. I actually might put Bohr on. Let me look at the other ones. I'll put the alerts on after. Maybe setting up for a double bottom break. It's at the 200. But if it holds, that one might have a chance. Not great ones today, but it looks like something might be going with these sub $1 stocks. Typically, not. I just kind of do this scan usually, Scott, just because I'm just so used to it. I'm trying to get, so yeah, that's actually a good point. I haven't been doing that lately. I used to, but that's actually a good reminder. Again, there's so many different ways to look at it. I typically like to get you guys the bull flags and the cup and handles a couple days a week. There might not be great ones, but yeah, I should. That's a good suggestion. I see things better. It's just my style, you know what I mean? It's just like more my preference. I like to get the bull flags and the cup and handles and kind of get them that way rather than, because a lot of people here, the other thing is a lot of people don't, it's especially for new traders, it's easier to understand a cup and handle, or a bull flag, bull flag and a couple handle. The wedges and falling wedges and rising wedges typically takes a lot more. First of all, nobody should be trading our watch list if they don't know how to trade in general. But in general, because we know a lot of people don't listen and they're still going to trade anyway. That's why I try to get as safest as possible for something that might be breaking out. And if it's in a falling wedge or a rising wedge and they miss the, that's why I tip, especially with smaller cap stocks, it's a lot more difficult. I love that. So that's also another reason why I do typically my scan, not the higher one, the 2 to 6%, because that's where a lot of times you'll get like a small little doji or a hammer or something off a reversal, like we had at the beginning of the week or end of last week with American Eagle and Bed Bath & Beyond. Those are reversals. So that's where I like to catch like a bullish harami type of pattern, that's a reversal upwards. But again, stocks that are selling off, maybe I'll take a look at that after, now that you're saying that. I actually have a scan, so there's not much popping up on these ones. So that's actually a really good point, Scott, to get back in my brain. Maybe I will actually pull that scan up right now and maybe we'll take a look at that. Very good reminder. right, so let's do a bearish scan. Nightly scan. Bearish. That should be one right here. There we go. Ah, all right. Blue apron. So typically the reason why I like doing kind of the bullish ones, I like to see like a perfect example. The reason why I would like to do so this one could easily, I like to catch it as I have that second candle coming in, if that makes sense. So I typically would like to see it as this may bounce off the 200. So this one may be interesting to take a look at. I like to ideally catch it like if you had the doji or the hammer right here. That's why I do like a 2% or something close, because you might get a little doji or a hammer, and that's why I like to try to catch it off the reversal for you guys, rather than like this one I could say, hey, watch if buyers come on off the 200. I like to see confirmation before I put you guys in, because then I could say, hey, you know, again, because I know people are going to look at the watch list, I'm going to say, hey, watch if there's a bounce off the 200 and continues up, and somebody might just buy at the 200 and the friggin' dumps, right? That's where I try to like be safer for you guys, if that makes sense. So yeah, Vic, we'll have to watch and see, but just remember, you know what I mean, there's still with SPY, right? Remember, gotta remember, there's the bulls, the bears, and also the Fed. Bulls, bears, Fed. So they may lose 290. Typically that might not be good. It might, but it's, you know, it definitely needs to pull back. Doesn't mean it's over with. If price starts holding support in these areas somewhere, the Fed may buy it back up, and then you have like I kind of was drawing earlier, not sure if you saw this. You know, right now it's looking like it's breaking the trend line out over here. You know, kind of like as you extend it, it doesn't look good, right? But we'll see. You know, maybe the trend line will extend out here. Maybe price will bounce down and it'll fall. Maybe it'll get a bounce off the 200, right? And then maybe buyers, maybe it'll fall. Or again, we got to watch and see, right? We don't want to guess. If it obviously you want to see it hold support out in these areas, like as it continues out. We'll see. If it fails this, that's not good. You know, we'll have to watch and see. We have no clue. But the thing you guys can't forget is don't forget about the Fed. Don't forget that Trump is in control of the Fed now with the Treasury. What they're doing behind the scenes, I don't know. But that Yahoo Finance article I was showing you guys, if he's in control of the Fed, do you think he's going to, I mean, it's an election year. Will this continue up as a V? Will it fail to a double bottom? I don't know. It could easily fail and fall down, and everybody's, you know, I already know what's going to happen, right? If it fails this and it tanks down here, then I'm going to get the trolls saying you're an idiot, you're wrong, blah, 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 QE, bunch of bullshit, all that. And meanwhile, that could happen this summer. And then what could happen? You could have a double bottom, and then he buys it up into the election. Then what? You know what I mean? So, I mean, we're still going to look at the patterns, right? We're going to look and see, hey, it's not looking so hot right now. It could be pulling back. Got to watch and see. Because if it starts hitting support right down in here, if that 9 EMA catches up, then you might have a bull flag on the daily and this thing rips, you know? And obviously it's pulling down back below 300, which is normal, right? It may be setting up, or it may dump. It may dump, tricking the bulls, or it may be pulling back, getting ready to rip. Watch for this 9 EMA to catch up. It may form a flag, and then boom, it rips. But the thing is, guys, right? The Fed's already saying they're going to buy this up. If they're going to say they're going to buy it up, and people think it's going to fall back down, I mean, that's where you can't go on hunches or guesses. You know, you got to be very careful on here right now. Fed steps in and saves the day. Quantitative easing, baby. So that's what I was saying. I'm going to go on a pro QE chat. I'm just going to piss a lot of bears off. I'm just going to tick all the bears off. So now, just from now on, I'm just going to say I love quantitative easing. Quantitative easing's amazing. I love the Fed, right? Love the Fed. Love quantitative easing. Love QE. Love anything. Love market manipulation, right? Love it all. But in fairness, technically, if you want your 401k back, you better start hopping on the QE train saying you love QE. If you want your money back in your 401k, that's how you're going to get it. Other than that, this thing's tanking. So this is my whole point being why I don't like the bearish scanner for you guys. I like to see the reversal set up, and I'm not seeing that many. I might do they're all Garbaccio. And I'd put them on to short, but the other problem is most people can't short. They don't have a broker that, or the funds. So I try to, what, I actually should do like one of these ones that don't have much of a gain. I know. Oh, ooh. This might be interesting. I don't like this, but this hammer may be intriguing off that. This is what we might like to see, that one. ALT. Now that's a low floater. Yeah. You know what I'll do for YouTube people? YouTubers, I'm going to shut this video off right now to keep it under an hour, just so I'll give some people a break. For those on social media, I'm going to redo a new scan and just scan for stocks that might have lower. See if I can get some doji ones in there. YouTube peeps, later.